Welcome to our channel, where we provide valuable insights and tips on financial planning and homeownership. Today's topic is all about overcoming bad credit and getting a mortgage. If you've ever struggled with bad credit, you know how frustrating it can be to secure a loan. But don't worry, we've got you covered. In this video, we'll explore the steps you can take to improve your credit score, alternative options for people with bad credit, and tips to help you get approved for a mortgage despite your less than stellar credit. Tip number 1, understanding bad credit. Well, let's start with the basics. Bad credit is essentially a reflection of your credit worthiness. Your credit worthiness is determined by several factors, including your credit score, payment history, outstanding debts, and length of credit history. Lenders use this information to assess how risky it is to lend you money. Why is bad credit such a big deal when it comes to getting a mortgage? Simply put, a mortgage is a huge financial commitment. Lenders want to be sure that you're capable of repaying the loan over the course of many years. If you have bad credit, lenders may see you as a high-risk borrower, which means they may be less likely to approve you for a loan. But what causes bad credit in the first place? There are a number of factors that can contribute to a low credit score. For example, if you've missed payments or defaulted on a loan, that can have a significant impact on your credit score. Similarly, carrying a high amount of debt, particularly credit card debt, can also negatively affect your score. It's important to note that bad credit isn't always the result of poor financial decisions. Life events, such as job loss, illness, or divorce, can also have a significant impact on your credit score. That's why it's so important to understand what factors contribute to bad credit and how you can improve your score. Tip number 2, steps to improve your credit score. First and foremost, it's essential to check your credit report. Your credit report is a comprehensive summary of your credit history, including all the accounts you've opened, the amount of debt you're carrying, and whether you've missed any payments. You're entitled to one free credit report each year from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion. Make sure to check your report thoroughly for any errors, such as accounts that don't belong to you or incorrect information about missed payments. Once you've checked your credit report and identified any errors, it's time to start working on improving your score. One of the most effective ways to boost your credit score is to make all your payments on time. Late payments can have a significant negative impact on your score, so it's essential to stay on top of them. Set up automatic payments or reminders to ensure you never miss a due date. Another way to improve your credit score is to pay down your outstanding debts. Lenders look at the amount of debt you're carrying compared to your available credit, known as your credit utilization ratio. Ideally, you should aim to keep your credit utilization ratio below 30%. If you're carrying a high amount of debt, consider creating a repayment plan to pay down your balances as quickly as possible. It's also important to avoid applying for too much credit at once. Each time you apply for credit, such as a credit card or a loan, it triggers a hard inquiry on your credit report. Too many hard inquiries can signal to lenders that you're a high-risk borrower, which can hurt your credit score. You may want to consider working with a credit counseling agency or a financial advisor. These professionals can provide guidance and support as you work to improve your credit score and manage your finances more effectively. Tip number 3. Alternative options for people with bad credit. In this section, we'll explore alternative options for people with bad credit who are looking to get a mortgage. Try working with a co-borrower or a co-signer. A co-borrower is someone who applies for the mortgage with you and shares the responsibility for making payments. A co-signer, on the other hand, is someone who agrees to pay the mortgage if you default on the loan. Having a co-borrower or co-signer can help offset the risk that lenders see in your bad credit and increase your chances of getting approved for a mortgage. Another option is to explore government-backed loans, such as FHA loans. These loans are designed to help people with lower credit scores or smaller down payments qualify for a mortgage. FHA loans require a minimum credit score of 580, but even if your score is lower than that, you may still be able to qualify with a larger down payment or by meeting other criteria. If you're a veteran, you may be eligible for a VA loan. VA loans are backed by the Department of Veterans Affairs and offer competitive interest rates and more flexible credit requirements than traditional mortgages. Additionally, there are state and local programs that offer assistance to homebuyers with bad credit, such as down payment assistance or low-interest loans. You could also consider working with a non-traditional lender, such as an online mortgage lender or a credit union. These lenders may have more flexible underwriting criteria and be willing to work with borrowers who have bad credit. However, be sure to do your research and compare rates and terms from different lenders to ensure you're getting the best deal possible. Tip number 4, getting approved for a mortgage with bad credit. In this section, we'll provide some tips for getting approved for a mortgage with bad credit. First, it's important to be realistic about your expectations. With bad credit, you may not be able to get the same terms and interest rates as someone with excellent credit. Be prepared to pay a higher interest rate and put down a larger down payment. Don't let this discourage you. However, with some perseverance and the right approach, you can still get approved for a mortgage. Next, make sure you have a steady source of income. Lenders want to see that you have a reliable source of income and will be able to make your mortgage payments on time. If you're self-employed or have an irregular income, be prepared to provide additional documentation, such as tax returns or bank statements, to prove your income. Another tip is to save up for a larger down payment. A larger down payment can help offset the risk that lenders see in your bad credit and improve your chances of getting approved for a mortgage. Additionally, a larger down payment can help reduce your monthly payments and the overall cost of the loan. You should also take steps to address any outstanding debts or collections on your credit report. Pay off any outstanding debts and work with collections agencies to resolve any outstanding collections. This will show lenders that you're taking responsibility for your financial situation and making a concerted effort to improve your credit. Finally, consider working with a mortgage broker. A mortgage broker can help you navigate the mortgage application process and find lenders who are willing to work with borrowers who have bad credit. Additionally, a mortgage broker can help you compare rates and terms from different lenders to ensure you're getting the best deal possible. Congratulations! You've made it to the end of our guide to overcoming bad credit and getting a mortgage. We hope that you found this video useful and informative. Remember, getting a mortgage with bad credit is not impossible, but it does require some effort and planning. By following the steps we've outlined in this video, you'll be well on your way to achieving your dream of homeownership. Don't forget to subscribe to our channel for more valuable insights and tips on financial planning and homeownership.